Okay, so in this video, I'm going to be going over my level strategy, how I market, where I market, and why I market. It's not going to make any sense to a lot of people that have traded ICT or other strategies because this one just looks stupid simple. And that's the whole point. I don't want all these stupid confluences, all this extra stuff that is not needed. I like to keep my strategy super simple, super dumbed down, and others think it's too simple and don't think that's the only strategy that I use. So I'm going to be showing you guys what to look for in order to mark these levels out. So right here is an example of what I would look for and what I want to see in order to mark these levels. As you can see, this consolidation right here. So what I will do is I will take my line, right, and I will mark it at the top of the consolidation where the market has tapped a lot. You want to mark it where the market has tapped a lot. So as you can see, the market wicked, and then we broke through. I'm waiting for the market to break out of this consolidation and push above this level, right? So we want to push above this level, break above the consolidation, and I enter. So to enter off the strong push, and I would target the highs, any highs that are over here or a previous level. And for instance, if we look over here, there is a high right here. But I don't put my TP at these highs, and I see people do it. It works, whatever. But after the years of trading, it just never really sat with me right. So what I like to do is I like to put it in the 50% range of the wick because I used to get edged all the time, and I used to just get pissed. My stuff would never hit TP. It would always just get close to TP, get edged, and would just completely dump. So what I saved myself after learning that and going through that trial and error, I put it in the 50% range of all wicks from now on. So as you can see, regardless it would have hit, but there is instance where it won't. So that's where I'd mark my TP, and I have my stop loss at this level or 10 points below this level. So right here is another good example, and I'll show you why. And also, I mark everything on the 15-minute time frame, and I'll enter off of lower time frames. I never mark anything higher or lower, always the 15. So right here, why would I mark this? As you can see, the market has hit this area a lot. You know, we tapped it, we broke around it, but this is what I'm looking for right here. I don't care about this, I'm looking for this. Wicked. Yes, we had a little breakthroughs, but that doesn't matter. We are in a downtrend. So yes, we broke above this level. Yes, you could take this trade, but I'm waiting for something like this. We are coming back down, strong push below, enter off this push, target these lows. And this is where I'm going to show you. The edging is what I'm talking about and why I put my TPs here. So as you can see, you got edged. But if I put my TP to the 50% range of this wick, you just hit your TP. So another example I'll show you guys is they're everywhere. These examples are everywhere. It's super simple. When their market is consolidating a lot, right, you want to mark where the market is hitting a lot. So right here, it'd be perfect. Wicked. And I'm waiting for it to market either to push above or push below. And as you can see, if I look out, we are in a slight uptrend. So I want to see this level get broken above, right? We push above, strong push, right? We break out of these areas, which I wouldn't say break above consolidation, break out of areas. I'd like to enter when my levels get broken. So when my level has a strong push, and these aren't strong pushes, these are just closes and closes. I'm waiting for a push like this. This candle right here is what I'd like to see. I'd enter off this push, and I would target, like I said, highs over here, or if there's another level in this area is what I would target. And for instance, there is another level in this area. So if we look over to the side, right here, the market has been hitting a lot. If you look right here, wicked, broke above, broke below, wicked. And if we come over here to our current trade that we want to take, enter off this wick, not wick candle, we enter off to this candle, which is a strong push. These aren't strong pushes, these are just small pushes and a close. Strong push, enter off the push, and I would target, take out this magnet, I would target to this next level. And my trades are averaging 100 points to 300 points per trade. Every trade is 100 to 300 plus. So as you can see, current day. Let's go to current day. These would be possible new levels right here. The market has hit a lot over in this area, which I had this marked before. We have the market hitting a lot in this area, and you can also go back and you can also see that the market has tapped. You know, we broke through, we played through this. We've also tapped, and this one isn't really the best because there's always, I'll show you guys better, but right here is another good level. Market tapped, tapped. If we just go back more, tapped, almost tapped, but it counts. Tap, and we could just keep going back. And these levels play for weeks, days. I like to refresh my levels when it's not in price range, meaning that if the market's right here and I have a level way down here, why would I still use it? So I'd remove that one and look for new levels. Another example would be in this area. They're pretty easy to find. Once you guys watch this video and look at your charts, you guys will see. The market has hit a lot in this area, right? I'm not looking back here, I'm looking right here. As you can see, tap, breakthrough. But I'm not trading this. I probably would use this level for this. We have a strong breakthrough, strong push through, enter off the push, and I would either target this level right here or this one. But since I have a level up here, I would target this one. And I also won't target certain levels if they're too far apart. Say this level wasn't here and I just had this one, I wouldn't target this one. I would target this one because they're just too far apart, super unrealistic. But if you entered off the push on here and you targeted up here, 250 points. If you targeted here, 60 points. You would still secure what you want to secure. I could keep showing you guys over and over multiple spots. Right here, another great level. I'm looking in this area, nothing back here, I'm looking right here. Tap. And we could just wait for this stuff to play out. It hasn't played out yet, and it might have. No, it has not. So this is literally all I do and all I look for. This is all I trade is these levels. And also I use some other confluences, but I'll go over that in another video. But this is what I trade on a daily basis before I used Motive Wave. And this is how I went from 0 to the life I'm living right now, financially free. This is exactly what I use to get there. Banging 20K days, 30K days, 40K days, 10K days. This is the strategy I use every time, and I will never leave this strategy because it's so simple, it's so dumb, and it works. That's what I like. I don't care about all this extra confluences that everybody uses because I'm not everybody. I use what makes it simple for me, and as you guys should too. Everything should be simple. You don't want your chart being overloaded with all these other confluences and CISDs, all these concepts. No, this is all I use and this is all I trade. And for some of you guys, you'll be like, oh, this video is confusing. Well, if it's confusing, I'll send screenshots. Just let me know, DM me, or type in the chat. I don't really care, but I will show you guys screenshots more in depth. But this is just a quick video showing you guys what I look for in the market and how I mark my levels, where I mark them, and why, and a little bit of TPs, how I mark my TPs and stop losses.